Hello everyone, this is Ahura. I will be with you to have a short review on US Federal Reserve meeting to see what they decided and how the market reacted to these decisions. First of all, let's review on what happened generally, and then we can go to more detail about the decisions that they made, the reason of these decisions. And then we can go forward and check the charts and see how the market reacted to these data and what could be our expectations for next movements. First of all, as it was expected, already 100%, it was expected to hold the rates. Federal Reserve held the rates unchanged at 4.25, between 4.25 and 4.50%. And now, generally, what we could expect from what we could understand from the talks and from the tone of the statement and the press conference, it was somehow a little bit more hawkish than expected. That's why the market reactions was US dollar especially reaction was in that way. Anyway, the market didn't react just to the Fed meeting. There are too many other options and too many other factors that the markets, especially the stock markets, have been carrying by that. Let's go in more detail and see what was the decision. So that was the decision, and let's see why the Federal Reserve made these decisions. What we could understand from the talks, from the press conference and the statement, and then from the answer that Mr. Powell gave to the questions, we could understand that the GDP growth slowed in the first quarter, in the first half of the year. Yesterday, we had a GDP number. We could see that the GDP experience or GDP increased by by about 3% in the second quarter. Yes, the GDP increased 3% in the second quarter, but we should not forget that it was decreased by 0.5% in the first quarter, which means in the first half, as Fed says, we had only 1.2% GDP growth. So it was not about, so we shouldn't talk about the 3% GDP growth. That's one of underlying risks that Federal Reserve is talking about. So while the GDP is like we have some risks in a GDP growth, at the same time, we could say that the labor market is really strong. Labor market, 4.1% is somehow is fine, and in middle we have 150,000 newly created jobs per month during this first half of the year. What we could say generally in the labor market that in both sides, applying for the new jobs slower, but at the same time, while the hiring is also slower, the supply also slower. So there is a supply and demand, both of the supply and demand in the labor market is slowing. So since both supply and demand at the same time they're slowing, that's why we can say that, okay, the labor market is cooling, but there is no such a big risk in the labor market. Well, as mentioned, because both supply and demand are slowing down together, so we have lower risk in a labor market. Maybe we can say because of the new technology and softs and other stuff that we had generally in the market. Now we can say that we have too many new independent jobs, and there are less people asking to work for someone else there. So this is like independent jobs, and the businesses are increasing. That's maybe could be one of the reasons for falling both for labor market supply and demand. On the inflation front, Federal Reserve mentioned that the inflation, as you can see here, also based on the data that we had yesterday, core inflation is about 2.5% for the first half of the year, for the second quarter, and generally around the currently for now. We have the core inflation at 2.5%. Yeah, headline inflation is slightly lower, but we can say that the core PC price index is the Fed expected inflation as the base of the inflation that they measure the inflation. So that's why we can say that inflation is still high. Even thought that it's much lower than 2020 second peaks, but still the inflation is slower, but still the inflation is much higher than 2% Federal Reserve target. So still we should be a little bit more cautious about the decision we make, because the inflation needs more attention. So about what the Federal Reserve going to think about or decide in the next meetings, as Mr. Powell mentioned, that the Fed is going to be more considered about the data that we're going to have later today. Also, we're going to have the PC price index for June. On Friday, we're going to have the NFP. Federal Reserve will take care about the data that's going to publish this week and the next week before the September meeting. With these data, considering these data, they're going to make new decisions that they're going to in the next meetings. But still, generally, the Fed says that the economy is in an accommodative condition. The economy is still strong and can handle the current rates, and we shouldn't be in a hurry. They have to take care about the risk of the tariffs. Even thought U.S. had some agreements, so gets up to some positive point with the South Korea, with Japan, with Europe, UK, and some other economies, but still there is a risk of there is a risk of becoming any to reach to any positive point with the China. So the Chinese tariffs are still there, and the market still should be so more careful about what's going on. Anyhow, that was generally what's happened, but still, and on one more thing that Mr. Powell mentioned in the press conference, and the reporters asked, and he mentioned the answer about the press about that. It was the independency of Federal Reserve. Yeah, the policy. They say that the policies they shouldn't and cannot impact the impact on the Fed policy. And the politicians cannot put the pressure on the Fed members to change their decision or make any new other decision. So that's one of that was also one of the other things that we should take about that and think about the Fed possible policies. Also in yesterday's meeting, Michelle Bowman and Mr. Waller, they decided to, I mean, they voted for 25 basis point rate cut, so we shouldn't forget about that also. The other members, they had a positive, but they voted for holding the current rate. But Michelle Bowman and Waller, they voted for rate cut. That was what happened in the Federal Reserve meeting. By the way, we shouldn't forget that earlier today also central bank in Japan had a meeting, BoJ, held the rates at 0.5% with no change as it was widely expected. Where is the, here we go, with no change as it was expected. So there is nothing to be worried. But we know that the Bank of Japan is a little bit more cautious about the decisions that they made, while the inflation is somehow lower than the previous month. At the same time, the economy was also slower. So that's why they were a little bit more cautious about whether they should increase the rates or not. So let's go and see the charts and check what's happening in the chart and what we can expect from the movements. US dollar index at the first, as a first move. Dollar index had a positive reaction after the meeting, right after the meeting, because these data says that right now we should have the current rates for a little bit longer, higher, longer. So that can support the US dollar index, which means that the dollar index slightly slow increased to around 99, above 99.50, but still we have other risks in the market as well. We have the risk of the lower economic growth. As mentioned, the GDP in the first quarter increased only 1.2%. If we don't have the better economic growth in the second quarter, we shouldn't be so much positive about the 1.7% or 1.8% overall 2025 GDP growth. There's a risk that we couldn't reach this target. So that's why we should be a little bit more careful about the economic growth. While at the same time, we should mention that the Fed, White House administration, they don't support the expensive dollar. So then we should do those things that we have to be careful about. Generally, with this data, with these things that happen in the market, we should be a little bit more careful. But dollar could be around 98 and a little bit around 98, a little bit higher or lower. But the dollar index at 98 could be fine for that. Gold with the stronger dollar slightly decreased, continuing the falling prices after new highs and reports in the stock markets. But 3,250 is the basic price for the gold, where we can expect the gold to have a positive reaction to the markets. So from now on, we can say that the gold can, as long as the gold is trading around above these area, could be positive. Generally, when we are looking at the market, we know that the demand for the gold from the central bank side and many others, they are increasing. That's why we can still be positive about the gold price. On the energy market, the oil increased a little bit more because mostly because of the stock markets movements, because of agreements, and because of the positive news that we had from the trade tensions, the agreements that the US had with the South Korea, with the Japan, Europe, generally the positive attitude that we have here, but still ongoing trade talks between US and China could be at the central stages for the oil and energy market. Yesterday also we had EIA weekly reports which shows that the US oil reserve increased by more than 7 million previous week, 7 million barrels. That could be negative for the oil price and could limit its increase. Oil price could be around $68 and $70 for now, not higher, not lower. About the stock markets, while the Fed's policies seems like more hawkish, which can be negative for the stock markets. At the same time, we had earnings reports. Yesterday we had Microsoft, we had Meta groups. All of them they had Meta platforms. All of them which amazing reports and gains, and that supported this overall the stock markets. At the same time, as mentioned, the trade agreements between the U.S. and some other economies, including South Korea, including Japan, including the Europe, they were positive, and this positive attitude coming from there, the stock supported the stock markets. That's why we can see the positive reaction from the in the stock market, especially in the Nasdaq with the tech stocks, the technology companies, technology stocks. They had amazing gains in the previous months that supported this Nasdaq 100. But on the other hand, if we look at the Dow Jones, we can see this divergence here with the Dow Jones falling down while the Nasdaq and the S&P 500 increasing. That can say that this diversion in the market could be one of the others, as one of the other underlying risk in the market, and we should be a little bit more careful. So while these positive attitude in the market supported the stock market generally, but at the same time, economic data and the Fed policies can limit these gains. On the cryptocurrency markets, this correlation with the stock market supported the Bitcoin to hold these areas, but there is no specific news or the data right now. We can say that can support this positive attitude and movement, but still technically above 114,700 is positive for the Bitcoin, and we can count on a boost, but still there is a risk, and we should be a little bit more careful about the next movements. Bitcoin limits gains is like limiting this. The bulls are limiting around 119,000. Could be it can be the fall. It can be the fall price or the levels, falling levels for the Bitcoin price. We should be a little bit more careful and cautious in the stock and generally in the cryptocurrency market as well. Have a good day. Hope it was helpful for you. If you had any other questions, sorry about the doubt about the. Let me say this also. As mentioned, the Bank of Japan also had a policy meeting. This support this decision, which was somehow a dovish decision, put the pressure on the Japanese yen. That's why we could see the uptrend in USD JPY. Generally, Japanese yen still cannot compete with other rubles that we have in the market. It has in the market generally about the yen. We have to be more cautious, especially as long as it's trading about 146.50 against US dollar index. But if in the next meeting we can talk about, we could be more optimistic about the rate cut in the US and rate hike in Japan, this trend can reverse. But still, as long as this attitude is not changed in the market, we have this kind of attention in the market and attitude in the market, we can still count on an uptrend in the USD or at least a slight movement above 146.50. That's what happened in the market, and what was the decision and the market reactions. Hope it was helpful for you. If you had any other question, don't forget to write in the comment section or try to get back to you as soon as I can. Have a good time. Bye-bye.